To kick off the conference, the chairman of SKAGEN, please welcome Tim Warrington.
Cyril, thank you very much indeed. Ladies and gentlemen, good morning, Happy New Year, and tack for det gamla. I'm delighted to add my welcome to Cyril's, to all of you here in person in Oslo, to colleagues and clients in Stockholm. I understand there is a bit of an issue with the underground, so they're coming in late, and also indeed in Stavanger, our hometown. And a very warm welcome for those of you who are joining digitally. For those of you in the room, if you're from overseas, don't worry. While there are no alarms planned, if around midday the Norwegian guests start looking at their phones, it doesn't mean that the missiles are incoming. It means that there is a national rehearsal of the alert and alarm system. Of course, if the missiles are incoming, we will escort you to the bunkers. Don't worry. Sorry, a bit of military humor first thing in the morning. Well, I think we're 1 year older, perhaps a little wiser, and now it's same procedure as every year, and you must pay the price of admission and listen to me for a few minutes before we get into the program for real, and I think we've got a very good one for you. We have sent out some questions this morning. Hopefully you will have received them on your cell phones. There's a link with a questionnaire. We want to gauge the view of the room here in Oslo. So do please, during the day, fill those in. They're very easy to do, multiple choice questions as to how you see the year, how you see the markets, and certainly at least one key event. And then I will try and capture those at the end of the day. Okay, first of all, let's move into a quick recap of 2023. You may recall, those of you who were here a year ago, this is the slide I gave you right at the end of, if you like, the review of the year. That picture on the left-hand side, searching for returns, and that came from The Economist in mid-December. And I think it really illustrated very well the sentiment going into 2023. Most investors had experienced negative returns in the preceding year, 2022, mainly due to rising interest rates and a tumbling equity market. And against this backdrop, 2023 turned out to be a great deal more positive than many investors had feared. But there were disappointments, and you can see that on the right. The year started with China lifting their somewhat draconian COVID restrictions. My apologies. And their domestic equity market performed strongly in January. However, as the economic effects of reopening eventually fell short of expectations, China ended the year amongst the weaker performing markets. Actual and expected inflation were key to understanding market dynamics in 2023, and indeed inflation turned out to be stickier than first expected, and we saw central banks increasing rates to levels not seen since before the global financial crisis. Falling inflation in the latter part of the year indicates that we are at or close to an inflection point, and I am sure that we will hear much more about this during today. I think it's difficult to reflect on 2023 without mentioning artificial intelligence, and at my old age, it's hard not to observe the triumph of hope over experience, especially over the shorter term. And I think that the absence of quantum hardware will certainly limit the potential for the time being, although the unproven claims in material science are certainly very exciting if they are true. So I will leave it to minds younger and greater than mine to posit on where this may take us in the future, beyond the current focus, which is very much on improving productivity. Suffice it to say, I am not an avatar. These words are mine, and any hallucination you may be seeing detected are mine also. Sadly, 2023 also was marked by a continuing spate of geopolitical events, notably continued war in Europe, and atrocity and terrible revenge in the Middle East. With much of the world going to the polls this year in 2024, one must expect some turbulence ahead. But I guess I don't need to remind this audience, here or indeed in the other locations, that geopolitical events short of world war matter mainly locally and over the very short term. And the wider and longer term consequences are generally muted, and more often than not, the capital markets recover very quickly indeed, if they are even affected in the first place. So, turning to the capital markets in 2023, what did we see? Well, I think we can all agree that 2023 was a very good year for equities. And while Norwegian and emerging market equities delivered decent returns, they were well beaten by the global indices. Growth trumped value, which was rather dull for a value house, largely due to the Magnificent Seven, and NVIDIA was the standout. And I'm sure if you are a tech investor focused on artificial intelligence and the companies associated with it, you're feeling pretty good today. Renewables were a more challenging space, and solar in particular took a pretty hard hit. I think in the final analysis, 2023 was the year in which TINA, there is no reasonable alternative, was replaced by TARA, there is a reasonable alternative. And with interest rates beginning their descent by the year end, corporate bonds had a solid comeback, posting positive returns for the year, and the sharp-eyed amongst you will have spotted that the performance track in the background is indeed the corporate bond track. And then finally, perhaps in my favorite asset class, I think we can say that for the majority, it was a better year for drinkers than it was for investors in fine wine and champagne. So, how did SKAGEN fare in the year? Well, with a particularly strong first quarter, SKAGEN's funds had a good 2023 in terms of both absolute and relative performance, with 3 out of 5 funds outperforming their respective benchmarks. In addition, at the year end, 4 out of our 5 equity funds were ahead of benchmark for either 3 or 5 years. Taking each of the funds in turn, starting with SKAGEN Global. Global had a great year in terms of absolute return, but fell back over the course of the year. The underperformance, though, was mainly due to weakness in just 2 names, 2 consumer staples companies, in which the team continued to have a very positive long-term view. SKAGEN Kontiki outperformed its reference index once again, despite a challenging fourth quarter. They have now outperformed the benchmark for 3 out of the 4 past years. And the outperformance in 2023 was largely a result of first-class stock picking in China, and I'm sure Russell Napier may have something to say about that later, in addition to an overweight in Brazilian equities. SKAGEN Vext keeps picking their best high-conviction ideas in the Nordic and global markets, and the fund delivered a solid absolute return, but underperformed the index due to its lower weighting in those large US tech stocks that largely powered the market. Turning to our small and mid-cap fund, SKAGEN Focus, it also had a very good year. After a very strong first quarter, both absolute and relative, the fund fell back in the second and third quarters despite having very stable returns. However, the fund staged a strong finish to the year, boosted by 3 buyouts in the portfolio, and closed the year with about 1% absolute excess return. Global real estate bounced back as interest rates came down in the fourth quarter, and the return for our real estate fund, SKAGEN M2, was positive. And the fund finished the year well ahead of its benchmark. One of the key drivers for the positive relative return was the buyout of the Norwegian company Self Storage Group. Last year, these were the issues that I left you with, looking ahead for SKAGEN. I think I can say, as predicted, the SKAGEN platform has been extremely stable, and our focus has been firmly on execution. As markets have risen, there has been some risk off, and clients have been migrating towards properly diversified investment portfolios. But there is definitely more to do here, and we still do see a structural underweight in fixed income amongst Norwegian investors. And we've celebrated 3 decades of SKAGEN with friends, family, and clients, and jolly good fun it was too. So, what is this year going to bring? Well, we are already the proud occupiers of our new premises at Bikronen in Stavanger. Normally, new premises are a sell signal, but may I reassure you that this is a building that is really going to work for us, and we look forward to reaping the benefits of it. This year, we will be keeping our focus on what we term gamma, how clients act. And with too many clients trying to time the market in 2023 and failing, probably because 3/4 of the S&P 500's gains came in just 10 trading days in the course of the year, I'm reminded of the words of the late, great Charlie Munger. In 2023, it was not the buying and selling, it was the waiting that mattered. And may I close with the same message of every year. No matter what 2024 throws at us, valuation counts and stock selection is key, and that is what we do in SKAGEN. So I hope you will all invest sensibly and with high conviction. Ladies and gentlemen, I wish you prosperity and good health in 2024. I hope we will give you something to think about during the course of today and maybe some questions to answer about your own investment portfolios. And I hope you enjoy our conference. Tack för mig.